I'm Julia Lee, an equities analyst at Bell Direct. This week was an extremely volatile week for markets. On Monday, the Australian market was down a massive 4.1%, only to be followed by 4 consecutive days of gains. So earnings took a little bit of a backseat to the volatility that we saw in markets this week. But we did see some key themes coming through. We continue to see cost cutting. Some impairments continue to flow through from the resource as well as the media sectors. And we saw dividend support despite the lack of earnings growth. Companies with weaker outlooks continue to be punished, and this week it was Boral whose share price saw a decline on the back of a weak outlook statement, but we also saw some turnarounds. We saw Pacific Brands coming out with a very strong outlook. It's predicting growth in the current financial year and the stock price doing extremely well. We also saw Billabong in the retail space doing well. Now Billabong was back in the black. And another retail stock to do well was Kathmandu on the back of its strategic review. So in the retail space, we saw Pacific Brands, which owns bonds, are doing well. We saw Billabong doing well on the market, and we also saw Kathmandu. So that was a nice turnaround given the softness that we have seen in retail stocks. BlueScope Steel is another company worth a mention. It came out with its earnings numbers, and it does look like the steel market still remains difficult, mainly because of the cheap imports from China. But the stock price did extremely well, and that's on hopes that it will close Port Kembla, which has been a problem child for the company. So we're watching this strategic review by BlueScope Steel very carefully. But of course, the two big companies to come out this week were BHP Billiton and Woolworths. We'll start off with BHP Billiton. The share price performed well this week. It does look like the dividend payment and the dividend support with a yield of about 7% for BHP Billiton at the moment is helping. We did see impairments mainly to the US petroleum assets, but that wasn't a huge surprise given the softness that we have seen in oil prices, but cash flow did remain quite strong. Of course, for BHP Billiton going forward, it really does depend on the outlook for its key commodities of iron ore and oil, and of course demand from China. Having a look at Woolworths, and we did see profits declining by 12.5%, the first decline that we've seen in 19 years for the company. But underlying net profit did remain flat compared to the previous corresponding period. The key to Woolworths share price is always the food and liquor division, and if we have a look at food and liquor sales, that was up by just 2.3% or only up by 0.3% on a comparable basis. It does look like the turnaround strategy that Woolworths has in place is gaining some traction, but the bigger question for investors is whether the competition that we are seeing in this space is going to continue to erode the market share of Woolworths, our biggest grocer in Australia. So all up, it has been a very volatile week for markets, one where earnings did take a little bit of a back seat. I think looking forward, some of the key questions for investors and traders is whether the commodities cycle is showing signs of bottoming. We have seen key commodities like oil and iron ore down around about 50%, and with China starting to devalue its currency as well as provide support through cuts in the reserve requirement ratio and interest rates, at some point this has to start to gain a bit of traction. So when will this decline in the growth cycle that we've seen in China, which started in 2007 and has been in place for 8 years, start to reverse? So we are watching a potential reversal. Remember that markets do move ahead of what's actually happening. So when the market starts to be a little bit more bullish on Chinese growth, we'll start to see these commodity prices turn. And also with the supermarket space, just watching Woolworths and what it is doing, and whether we are going to see competition in this space continue to erode market share in Woolworths, and whether we're seeing this in some of the other sectors like telecom, whether we are seeing some of the smaller players like Optus and Vodafone gaining some traction in terms of eroding margins at Telstra. So it's been a massive earnings season, a little bit of a disappointing one, but one that's been overshadowed by the volatility that we've seen in global markets, concern around Chinese growth, and also the raising of US interest rates potentially later on in the year.